So there's a lot of young kids making a lot of money on TikTok, but I gotta believe that they don't totally understand how taxes work on the platform, because this is something that's gonna be totally new to them. I mean, their parents probably work a W-2 job their whole lives. They don't know what's up either. So in this video, I wanna break down everything you need to know about taxes on TikTok. This includes what you're gonna have to pay taxes on, how much, and then these sweet deductions that you're gonna be able to claim as a result of your doing business on TikTok. And while there weren't many perks to slaving away for 8 hours a day at a Dairy Queen grill and chill, one of the few was that I knew that come tax season, I could get away with TurboTax free edition. I'd get a couple $100 in my pocket and I would walk away after like 30 minutes of doing my taxes. That's not gonna be the case on TikTok. So if you wanna make money on TikTok, or you're already making money on TikTok and you want to avoid tax evasion, make sure to watch this video all the way through, because this stuff is not complicated. However, it is going to be very important that you understand it if you are going to be making money on TikTok, because if you don't pay your taxes, the IRS is going to be very upset with you and they are going to track you down and make sure you pay. So you're going to want to stay ahead of that and make sure that you don't cause any issues with the IRS. So let's dive right on into it. And before we do, just a quick little disclaimer here, folks. This is not tax advice. This does not apply to your individual situation, and this is for educational purposes only. So let's start off by talking about what kind of income you're going to be receiving on TikTok. So you got to understand this before you can understand how you need to pay taxes on that particular income. So there are 3 main ways that you're going to make income on the TikTok platform. The first of which is through the TikTok Creator Fund. Second of which is through donations. Third of which is through sponsorship. So each of these going to be treated a little bit differently. So we're going to dive into each one, break it down for you, and tell you exactly how you need to be dealing with this when it comes to taxes. So starting off with the Creator Fund, a big misconception here is that the Creator Fund is very similar to YouTube AdSense. It's actually not. So the TikTok Creator Fund is basically a $200 million pot of money that TikTok created and said, hey, we're going to start paying this out to you creators on the platform for making content. And how your payout is calculated is not just like YouTube AdSense, where it's like a cut of the ad revenue goes to you. It's kind of just a black box where TikTok decides, all right, you can have $5, you can have $20, Charlie D'Amelio, you can have like $1 million. So it's really up to TikTok's discretion. They don't make it public how this is calculated, but they're kind of just throwing out money to you left and right. And if you are receiving money from this TikTok Creator Fund, you do have to pay taxes on it. And so what's going to happen here is at the end of the year, TikTok is going to send you a 1099 form. And this is the form that all companies are going to send to their independent contractors. So same thing as if you were an Uber driver or a Lyft driver or Postmates or whatever, you get a 1099 form that basically reports, hey, this is how much income we paid to this person as an independent contractor. Because as a TikTok creator, you are not an employee of TikTok, you are an independent contractor on the platform. That means you don't get benefits, you don't get a retirement plan, but you do get some cold hard cash in your pocket that Uncle Sam is going to want a cut of. So with your Creator Fund, you're getting a 1099 at the end of the year with all of your income reported on it. Now, if you made under $600 from the Creator Fund, you're probably not going to get a 1099 form. However, you still have to legally report that income to the IRS. They still want to know about it and they still want taxes on it. But if you got under $600, you might not get one of those forms, because at that point, TikTok is not legally required to send you one. You are still legally required to pay taxes on that money though. So that's your Creator Fund, pretty straightforward. Next, we've got donations, which are honestly treated very similarly to Creator Fund money. And you might be a little bit confused because it's called donation. So you might think, oh, is this just a gift that someone's giving me that I don't have to pay taxes on? That's not the case. So even though it's called a donation, that's a little bit misleading, because you do still have to pay taxes on the TikTok donations that you receive, same as you would with the Creator Fund. So again, TikTok is sending you a 1099. It's going to have your donations on it as well, and you are going to be expected to pay income taxes on those. Again, if it's under $600, you might not get a 1099, but you still got to report that on your tax return. Now, when it comes to sponsorships, you're also looking at a 1099 situation, but there is additional stuff you got to keep in mind if they are sending you free product. So again, with the 1099, they're going to send you a 1099 if they pay you $600 or more. So it's a $500 sponsorship. They might not send you a 1099. They might, totally depends on their processes, but you still legally have to report that income to the IRS. The IRS wants to know about it, and so you should probably be reporting that income. Now, when it comes to free product, how this works is if you're receiving over $100 in free product from a company, you are legally required to report that as income as well. So say you're getting sponsored by Sony and they send you this nice camera that I'm recording this video on right now. That is going to be reported as income for you. The fair market value of the camera, you go on Amazon, you figure out how much it's worth. You are going to have to report that as income on your tax return as well, in addition to any money that they may have paid you. However, if it's under $100, the IRS is like, you know what, we don't really care that much. So if you're getting some free makeup that's worth less than $100 or whatever, then you don't have to report that as income on your tax return. But when it comes to the intricacies of taxes, you're probably going to want to talk to a tax specialist at some point just to make sure that you are reporting things correctly. Because if you're not, you could run into some serious issues. Because like I said, the IRS, they want to get paid. They're going to do whatever it takes to get paid. And if they find out that you did not pay them as much as they wanted you to pay them, that's when you're going to start to have some issues. So that's your income. But now let's talk deductions. Okay, this is the good stuff because this is where you can reduce the amount that you're going to owe in taxes. Income, that's increasing your amount. Deductions, that's what we're decreasing. This is the good stuff. Now, any business expense that you have that is both ordinary and necessary qualifies as a business expense that can be deducted. Now, as you can see, those are some pretty broad terms, okay? It's not very cut and dry. So this is where talking to a tax specialist comes into play because, I mean, a lot of things are pretty straightforward. You know, if you're making TikTok videos, you probably need a ring light, you probably need a decent camera, you probably need a microphone. But beyond that, it kind of is a bit of a gray area on what is both ordinary and necessary. But in general, this kind of scales with your business. So if you are a TikTok creator making, say, $1,000 a month on the platform, probably not going to be ordinary and necessary for you to fly first class, spend $5,000 on a plane ticket, because that's like half a year's worth of your income, okay? So really what you need to look at here is, are your expenses kind of proportionate to the actual business that you're doing? And that doesn't mean that you can't spend all of your money on deductions, but it does mean that you probably should not be living super lavishly and taking those deductions if you are just a very small creator that's just getting started. All right, now a really big misconception out there when it comes to taxes, especially on TikTok, is that deductions are free money. And they're absolutely not free money, okay? So if your tax professional tells you to go out there, spend all your money, get all those deductions because it's free money, that's incorrect, okay? You should probably find a different tax professional. Because what deductions basically are is they're deducting money from your income. And so this is not a dollar for dollar reduction in your taxes. So if you go out there and buy a $100 deduction, a $100 camera that gives you a $100 deduction, that is not $100 less in taxes that you're paying. That is $100 times your tax rate equals how much tax savings you are getting there. So if you buy a camera for $100, you're in the 25% tax bracket. You are essentially saving $25 on your taxes, not $100, $25. So really the way that I like to think about this is in terms of like a discount. So at the end of the year, say you've got $100 in income from your business, okay? Awesome, you did a great job. And you are deciding, okay, do I want to spend this $100 on a camera so that I don't have to pay any taxes on my earnings? Because if you make $100, you spend $100, you got $0 in net income. Net income is what you are taxed on. So you could say, hey, I want to take my $100, spend it on a camera, have $0 in income, pay $0 in taxes. Or you keep that $100 in your bank account, you're in a 25% tax bracket, and then you pay $25 to the IRS and you are left with $75 in your bank account. At the end of the year, free and clear, that is your money. So your option is buy the camera or keep the $75. So essentially, the camera costs you $75. You're getting a 25% discount on that camera if you chose to buy it. And so that's kind of how I like to think about deductions, okay? If that 25% discount kind of pushes you over the edge and you're like, okay, that's actually worth it to me now. Before at $100, I was like, I don't know if I actually want to buy this, but at 75, it makes sense. Then maybe it makes sense to take that deduction, buy that camera, etc. But if it doesn't, okay, don't just buy junk because you want to have a deduction. That's just silly, okay? If this $100 camera was just something you were never going to use, was just a total piece of junk, don't tell yourself you're saving money on it because it's a deduction. Tell yourself you're spending $75 on this piece of junk, because if a piece of junk goes from $100 to $75, it is still a piece of junk and you still probably should not buy it. So it's better to just keep the $75 in your bank account. You've got that money free and clear than to go out there and buy a piece of junk that you're not going to use just for the tax deduction, in my personal opinion. Again, that's not tax advice. That doesn't apply to your particular situation, but that's just my opinion as a person on YouTube. And so all that being said, you are taxed on your net income, okay? And your net income is your income minus your deductions gives you your net income, okay? Net income is what you are taxed on, so that's what your tax rate is going to be applied to. So again, like I said, if you've got $100 in income, you buy a $100 camera, your net income is $0, you're taxed on $0. If you have $100 in income, you don't buy a $100 camera, you've got $100 in net income, and you're taxed on that $100. So now that you've got your net income, how are you actually taxed on that? How much in taxes are you paying on your net income? Well, your 1099 income is going to be taxed the same way that all independent contractors are taxed. And there are two main taxes you're going to be paying. That's your income taxes and your self-employment taxes. So starting off with income taxes here, these are the same income taxes you'd be paying if you were an employee somewhere, except the big difference is that there is no withholding. So when you work at a company, you get a paycheck. On that paycheck, you're going to see that your taxes are deducted from your income. So you're going to see, okay, I made $15 an hour, but in reality, I'm only getting like 12 because $3 per hour or whatever is going to different kinds of taxes. And so that happens so that when you file your taxes, you are not having to pay your entire tax bill at one point in time. Now, this is not the case when you are self-employed because no one is withholding your money for you. Your sponsors aren't withholding money. TikTok's not withholding money. You are the one that's receiving all of this cash at once, which is great. But at the same time, it means you're going to face a much larger tax bill because you haven't just been chipping away at it every single time you've gotten paid. So it's going to be in your best interest to kind of plan for this. Okay. And personally, what I do is every time I get money, I set 25% of it aside. What I actually do is I have a high yield savings account. So a savings account that pays me an above average rate of return. I have that at a bank that's not even my main bank, not where my checking account is, not where anything else is. It's literally just this account over there. And I take 25% of my money, I toss it in that account, it's earning interest for me, and then I pay the government out of that particular account. So that money is kind of out of sight, out of mind, but it's still earning interest. So hopefully I can earn some like passive income on that while it builds up in order to pay the government. So that's what I do with taxes personally. It works for me. It's a good situation for me. But yeah, 25% of all the money that comes in the door for me goes straight out the door, straight to my tax account where I can't even touch it. And so you definitely don't have to do that yourself. But if you do want to not be so surprised when your tax bill comes around and it's in the thousands of dollars, then I would recommend doing something to get some money set aside for you to just kind of plan ahead for that tax bill that's going to hit you at some point. Now, your income taxes are based on your tax bracket, and I'm going to make a whole video just about how tax brackets work because they're a little bit confusing. So for now, just understand that if you're in the 25% tax bracket, that doesn't mean that all of your income is going to be taxed at 25%. It just means the top little bit of your income is going to be taxed at 25%. The rest of it is going to be taxed in these other buckets. But in general, as a self-employed person or as someone who works on TikTok, you're probably going to end up paying more in taxes than you expect. So it's best to just save more money than you think you're going to need to. And then when tax day comes, maybe you've got extra left over that you can just take and spend yourself. But it's always better to be over-prepared for taxes than under-prepared for taxes. Now, with your federal income taxes, you are probably going to have to pay them quarterly if you're making a decent amount of money on TikTok. And according to the government, if you're going to owe them over $1,000 in federal income taxes during the year, you are required to pay quarterly taxes, or you are going to face a penalty. Now, some people decide to just eat the penalty and only pay yearly. That is totally a decision that's up to you. I don't recommend you to do either one. I don't have a personal recommendation for you because I am not your tax advisor, but just know that if you're not paying your taxes quarterly and you owe over $1,000 in taxes for the year, then you are going to be assessed some penalties. And how do you know if you're going to owe over $1,000 more in a year? So if your net income on TikTok, so again, that's income minus deductions, is over $10,000, you're probably going to owe quarterly taxes. You're probably going to owe over $1,000 in taxes, which means you're going to need to pay quarterly. So just kind of think about, okay, based on my income, based on my deductions, do I think I'm going to earn over $10,000 this year on TikTok? If answer yes, then you should be paying quarterly taxes. I'll be making a whole video on that soon, along with how much you actually need to pay in these quarterly payments. So stay tuned for that. Now, on top of your income taxes, you're also gonna have to pay self-employment taxes. And if you want kind of some context on how these work, you should watch my last video where I talk about how much Mr. Beast pays in taxes, because he pays a ton of self-employment taxes. But essentially what these do is they go to pay for things like Social Security and Medicare. And although they're called self-employment taxes, you actually also pay these when you are an employee. However, you're only paying half of them when you're an employee because the total self-employment tax rate is 15.3%. That includes your Social Security tax and your Medicare tax. Now, when you're an employee, your employer picks up half of those and you pay the other half through deductions from your paycheck. So you'll probably see on your paychecks the Social Security tax, Medicare tax. Those are called payroll taxes or self-employment taxes. As an employee, your employer pays 7.65%. You pay 7.65%. You add that up and you get 15.3%. As a self-employed person, you are the employer and the employee, so you're paying both halves of that. TikTok is not your employer, so they are not paying any of that. You are expected to pay the full 15.3%. And if you're paying your federal income taxes quarterly, you should also probably be paying your Social Security and Medicare taxes quarterly in order to avoid any penalties. So the takeaway here is that you are going to owe taxes on your TikTok earnings, both income taxes and self-employment taxes. There is no withholding on that income, so the entire amount is going to come to you, and it's going to be on you to set aside some of that to pay your taxes down the road, or don't do that, and then when your taxes roll around, just kind of freak out because you owe thousands of dollars to the government that you don't really have on hand. Now, you're going to be getting 1099 forms from TikTok and any other sponsors that you have for the money that they pay you. You're going to want to save those because you're going to need them when you go to file your taxes. And when you do file your taxes, you're going to be taxed on your net income, which is your income minus your deductions. It's going to get you your net income, which is what you are actually taxed on. Now, in general, it's likely going to be worth your while to talk to a CPA here, especially if you're making a significant amount of money on the platform. Personally, I do my taxes myself and just use TurboTax, but that might not be enough for you if you have a more complex situation, or if you're just not a huge personal finance nerd like me that likes to do your own taxes because you think it is a fun way to spend a Sunday. Now, if you have any questions about taxes on TikTok, feel free to drop them in the comments below and I will respond to each and every one of them because, like I said, I'm a huge nerd. I love nerding out on this stuff and I'm always happy to help out. And now the next thing you should do is click that subscribe button down below and check out this video over here where I dive deep into exactly how much Mr. Beast paid in taxes this year. It was a super interesting video to make. I think you're really going to enjoy it. So check out that video and I'll see you over there.